The S&P Daily rebounded faster than expected this week. So what kind of markets should we buy? Bruno Estier is here to tell us more. So, good morning, Bruno.
Good morning, Monica.
Now, after an interesting start, a volatile year in terms of equity, you're feeling a little bit more optimistic and want to talk about a rebound. How do you see it at present?
Well, if we look at a rebound, we need to focus first on kind of the main driver. We know that the main driver was a decline in oil stocks and oil in particular. And here we have the chart, the weekly chart of oil, and we see that we went all the way down to 27.50 as a spike, and last week it managed to close on a white candle above the open, and that's called a reversal.
Okay, but how sure are we about a bottom?
Well, technical analysts used maybe a shorter time frame, so they would go from the weekly charts to the daily charts. On the daily charts, they also noticed, like on the weekly, that there is some bullish divergence, so that's usually suggesting a bottom on both time horizon. And then they look at how past bottom took place. And if we look at here in August, we see that after it broke a downtrend line, it started to accelerate, and it accelerated up to 50% retracement. So if we want to make a prognosis of what could happen now, probably from 27, it could rebound to the 50% level, which is 39. And we see this 39 is basically the bottom of the former range. So here we have the big frame. We probably expect a rebound between 29 and 39.
Okay, and what about the S&P 500? What can we conclude from there?
From there, we saw, for example, from that rebound here on the oil, that it moved back below 30%. So obviously, because of the correlation between oil and S&P, it has an immediate effect. And we can notice that very nicely here on the chart of the 25th of January. From the top, it's expected to move down along oil, and then it should be a buy the dip opportunity and a rebound. Because we had the first move, so we do not expect a retest all the way down, but maybe toward the 50% of this move. And if we look the next day, we see that exactly what happened. It happened relatively even faster than even expected, so it rebounded directly from the open. And by doing so, it keeps the momentum upwards up here for a rebound in direction at least of 50 or 60%.
So what kind of markets are we then going to buy?
Well, in a rebound, we first maybe think about what was sold with too much momentum. So we might think about oil and energy sectors. And we would look at these charts, but we immediately noticed there is a problem. And this problem is the relative strength of the energy sector versus the S&P 500 is still in a downtrend. So if we would play the energy sector, maybe we're not playing the best sector which rebounds, because other sector might rebound better. And for example, we could look at discretionary. If we look at discretionary, here we have the relative strength of discretionary versus S&P. We see there is a nice rebound. At the same time, there is a rebound from the spike low of last Wednesday to now. Or we could look at technology, and even there we have an even better picture, because we are making higher high on the relative strengths while we are breaking the downtrend. So really the relative strength is a key element.
Okay, but what about emerging markets? Is there not anything we can look at there?
If we look at the energy market, for example, let's take China. We see that we are very in a similar situation with the energy sector. The relative strength of China versus S&P is still moving down, and even further, the emerging market, comparing emerging market and China, we see that China is also underperforming the emerging market. So we see here that probably we want to avoid China. Let's look at another emerging market, maybe India. Here the situation seems a little bit better, because India seems to rebound a little bit versus the S&P 500, as we see here on that line. But we need also to confirm a little bit better this retracement and this upside momentum, and we would like to have basically a chart which is making higher highs here. And that means that between India and China, we would prefer probably India.
Okay, but what about the likes of Japan and Europe? Is the relative strength there rising?
That's a good thing to try to look at. That's our main factor now that we want to look at in the rebounds. Here we see the black line here, dotted black line. The rebound effectively came with rising lows, if you wish, but we are not yet above the descending trend line. We are not even yet below the former highs. So here it tells us we need a bit more patience, and we need that the momentum which is moving up develop a little bit more. If we look at Europe, we see that the relative strength is much closer to the descending trend line, so we might have a signal to for an acceleration of an overperformance of Europe versus the S&P in coming days. But we still need basically to wait for that signal before we rush into it. So our preference is to go first the US market, and then look for the relative strength outperformance of other markets later on during the coming weeks.
Okay, so patience is a virtue, but I guess it is key at the moment.
Yes, it is very important because you never know exactly how deep the weak market can go down. So in order to avoid too much volatility, you will go for the stronger markets, which have less potential to pull back a little bit.
Okay, well, Bruno, thank you very much for shedding some light on it today. It's been a pleasure once again. Thank you.
You're welcome. Bye-bye.
Okay, well, that's all from Bruno and myself for the moment, but tune back in 2 weeks when we do more of the same. Goodbye for now.